हेलो स्टूडेंट्स, वेलकम टू सागर शर्मा क्लासेस। आज हम आपके लिए लेके आए हैं फाइनेंशियल मैनेजमेंट का एक इम्पोर्टेंट टॉपिक, कॉस्ट ऑफ कैपिटल, मीनिंग, सिग्निफिकेंस, डिटर्मिनेंट्स एंड इट्स कैलकुलेशंस। तो ये काफ़ी इम्पोर्टेंट टॉपिक है। कॉस्ट ऑफ कैपिटल बेसिकली आप जानते हो कॉस्ट ऑफ कैपिटल के बारे में। इसको हम और भी नामों से जानते हैं, जैसे कि कट ऑफ रेट, हर्डल रेट ऑफ रिटर्न एंड मिनिमम रेट ऑफ रिटर्न। पहले तो यही तीनों नाम इसके इम्पोर्टेंट है। काफी बार क्वेश्चंस में अलग अलग नाम से पूछा जाता है। आपको कट ऑफ रेट दे दिया जाता है, या हर्डल रेट दे दिया जा सकता है, या मिनिमम रेट दिया जा सकता है। बेसिकली ये होता क्या है, इज द रिटर्न एक्सपेक्टेड बाय द प्रोवाइडर्स ऑफ कैपिटल, दो आर बेसिकली शेयर होल्डर्स, lenders and debt holders. Like this, for take example, if मान लीजिए एक शेयर होल्डर है जिसने आपकी कंपनी में अपना शेयर कैपिटल कंट्रीब्यूट किया हुआ है, तो जो वो एक्सपेक्ट कर रहा है जिस रेट पर, रेट ऑफ रिटर्न, वही उसका हर्डल रेट या कॉस्ट ऑफ कैपिटल बोला जाता है। या जैसे कि डेफिनेशन भी दी है विलियम एंड डोनाल्डसन ने, कॉस्ट ऑफ कैपिटल मे बी डिफाइंड एज द रेट ऑफ दैट मस्ट बी अर्नड ऑन द नेट प्रोसीड्स to provide the cost element of the burden at the time they are due. ऐसे ही सोलोमन एजरा ने भी दी हुई है, कॉस्ट ऑफ कैपिटल इज द मिनिमम रिक्वायर्ड रेट ऑफ अर्निंग्स और द कट ऑफ रेट ऑफ कैपिटल एक्सपेंडिचर। एंड जेम्स सी वान हॉर्न भी बोलते हैं कि ए कट ऑफ रेट फॉर द एलोकेशन ऑफ कैपिटल टू इन्वेस्टमेंट ऑफ प्रोजेक्ट्स, इट इज द रेट ऑफ रिटर्न ऑन अ प्रोजेक्ट दैट विल लीव अनचेंज द मार्केट प्राइस ऑफ स्टॉक। बेसिकली व्हाट इज द सिग्निफिकेंस ऑफ कैलकुलेटिंग द कॉस्ट ऑफ कैपिटल, ये आपको पता होना चाहिए। सबसे पहले तो जब आप कोई इन्वेस्टमेंट प्रोजेक्ट वो कर रहे हो इवेल्युएट, तो आपको कॉस्ट ऑफ कैपिटल की जरूरत पड़ने वाली है, क्योंकि आप डिस्काउंट करते हो एक्सपेक्टिंग एनुअल एंड टर्मिनल कैश इनफ्लोज और आउटफ्लोज को इसी रेट पर। और डिजाइन द कैपिटल स्ट्रक्चर, जब आप अपना डेट इक्विटी मिक्स तैयार करने वाले हो तो भी आपको कॉस्ट ऑफ कैपिटल की जरूरत पड़ेगी, क्योंकि उसमें आप डिफरेंट डिफरेंट जो सोर्सेज हैं, इंडिविजुअली इक्विटी, डेट, रिटेन्ड अर्निंग्स, उन सब की कॉस्ट आपको निकालनी पड़ती है। फाइनेंसिंग डिसीजंस लेने में कि आपके पास कितना इक्विटी होगा, कितना शेयर्स होगा, वन ऑफ द टू सोर्सेज ऑफ फाइनेंस। एंड डिजाइनिंग द ऑप्टिमल क्रेडिट पॉलिसी, because you have to calculate the cost of fund blocked with customers, so you have to need cost of capital. Financial performance appraisal, for comparing actual rate of return and cost of capital, you have the need of cost of capital. Now, what are the factors that determine the cost of capital? And we can say factors affecting the cost of capital. The first one is investor expectations. What are the investors' expectations about the annual return and terminal returns and capital gains? And what are the expectations of market intermediaries like commission to brokers, underwriters, merchant bankers, and corporate tax rates? Corporate tax reduces cost of borrowed source as interest qualifies for tax rebate, because you already know whenever you take more debt, you have take the more advantage of the interest, that is corporate tax rate. Net cash inflows at the beginning, it means net proceed or the amount realized from a source of capital. Now the next determinant is net cash outflow. It includes interest on borrowing, dividend on share capital, and redemption value of external contributors of capital. Now you have to determine the calculation part, how to calculate cost of debt, cost of debenture, cost of preference share capital, cost of equity capital, cost of retained earnings. So one by one we will discuss all of these. First one, cost of debt. How will you calculate the cost of debt? See, very simple formula, interest upon net proceed into 1 minus tax, because interest is a tax deductible expense. So we have to take 1 minus t. Like we have taken an example, a company has taken loan of rupees 10 lakh from IDBI at 10%. So this is your interest rate, 10%. It paid loan processing charges including legal expenses 20,000. If corporate tax rate is 35%, what is the post tax cost of debt? So interest 10 lakh, 10% is 1 lakh, and 10 lakh minus 20,000, it is your net proceed 9 lakh 80,000 after deducting these expenses into 1 minus tax rate 0.35. So when will you solve it? It will come 6.63%. So it is very simple to calculate, just you have to remember the formula. After that, cost of debenture. How will you calculate cost of debenture? Same formula, interest upon net proceed 1 minus tax. But this is the case of irredeemable debentures. But when your debentures are redeemable, when you have to pay after a specific period of time, then this formula is used, interest plus maturity value minus net proceeds upon n upon MB plus MB upon 2, and 1 minus T is the same. So now take an example of this also. A company issued 10% debenture of 100 each at 2% discount. These are redeemable after 5 years at 3% premium. The issue expenses are 1% and corporate tax rate is 35%. You have to calculate the post-tax cost of debenture. Firstly, interest you have given already 10. So 10 is interest plus MB minus, what is the formula? Formula is MB minus NP. Maturity value, you can see maturity value 3% premium. This is face value. So 103, 103. After that, discount is given 100 minus 2, 98, but 1% is issue expenses. So 100 minus 2 minus 1, it will come 97. Net proceeds, like this you have to solve it and it will come how much? 7.28%. So just you have to remember this simple formula in case of redeemable debt or debentures. After that, how will you calculate cost of preference share? Same formula. If the preference share are irredeemable, then we will say D1. D1 is preference dividend upon net proceeds because these are irredeemable. But in case of redeemable preference share, the formula will be used that will be used in the case of cost of debenture. But here, remember, here tax deduction is not allowed because dividend is paid after the tax, because whenever you calculate the net profit, then the dividend will be paid from the net profit. This will come after tax deduction already. So here is not 1 minus t. It is the same process in case of cost of debenture. Now, most important, cost of equity. There are various ways to calculate the cost of equity. First one is earning yield approach, dividend yield approach, dividend yield plus growth approach, dividend to average net worth approach, and CAPM, capital assets pricing model approach. So see one by one. Earning yield approach is E1 upon P0. EPN is expected EPS and P0 is current market price. We can say EPS upon MPS. In the other words, we can write like this. The dividend is DPS upon MPS. So you have to see the question. If the question is given EPS and MPS, then you can see calculate the cost of equity by this approach. And in the question, if DPS is given, you have to use this formula. And dividend yield plus growth approach, if growth is already given in the question, so D1 upon P0 plus G. Okay. And if you, what is the D1 here? Dividend paid has increased year over year. Okay. The D1 like this. You have to calculate if dividend paid in the year you have given. The growth rate you can calculate by this method also. If you have given the dividend for various years, so you can calculate by this approach. Dn upon d0, 1 upon n minus 1. Like this you have given in this 16, 17, 18, 19, 20, 5-year dividend is given. Growth rate, how will you calculate? So like this you have to calculate, and n is here, n minus 1. Total is 5, so you have to take 4 by this approach. 20 latest year and this is your first year. By this approach you can also calculate the growth. Please remember. Now dividend to average net worth approach, D1 upon A and W. How will you calculate average net worth approach? Net worth in the beginning of year and net worth at the end of year, and you have to take the average. Net worth includes equity share capital, reserve and surplus, and credit balance and profit and loss account. Now, the most important method is CAPM, capital asset pricing model. This is very simple. Cost of equity equals to risk-free rate plus beta is the measure of the unsystematic risk, expected risk or beta coefficient, and RM is market premium minus risk-free rate of return. By this, yeah, like you can see, risk-free rate of return is given 5%, market rate of return is 14%, and beta is already given 0.8. You have to calculate cost of equity. Just you have to put the value and it will come 12.2%. Now, the next one is cost of retained earnings. What is the retained earnings? Basically, whenever the profit comes, some part of the profit is retained by the company. That is your retained earnings. So retained earnings actual have no cost because you don't have to raise the fund by the outsiders. This is your internal source of financing. Basically, retained earnings appear to carry no cost as they represent fund which have not been raised from outside. But the opportunity cost of dividend foregone by shareholder represent the cost of retained earnings. So what is the formula? Remember, KE 1 minus TP 1 minus F. So KE is cost of equity, TP is personal tax rate on dividend, and F is flotation cost. Like if the cost of equity is 20%, flotation cost is 5%, and shareholder personal tax rate is dividend 30%. So what is the cost of retained earning? You just have to apply 1 minus TP. TP is personal tax rate, and 1 minus F flotation cost. This will come 13.30%. So thank you very much. If you have any doubt in any part of cost of capital, so you can ask in the comment section. Thank you.